What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, we're going to be talking about both silver and gold and why I'm still stacking silver, but at the moment, no longer interested in gold for the time being. But we also have to talk about what Jerome Powell just said while testifying before Congress yesterday. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club, and of course, go and get your 5 free stocks by downloading Webull and funding your account. Normally it's 2 free stocks, for the next couple of days it's 5. Everything is linked in the description. So today is Thursday, March 3rd, 2022. The current spot price of silver as I'm filming the video is $25.12. It's down 18 cents or down 0.71%. Nice little dip on silver, but it's still holding on to that $25 an ounce range. Spot price of gold is $19.30 even. It's actually up $1.30 or up 0.07%. So it's just a hair in the green. And of course, the gold to silver ratio is in the 75 to 76 to 1 range. But of course, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. Okay, so in today's video, we're going to be talking quite a bit about silver and gold as usual. I have some coins, rounds, and bars on display, and for the last couple of years, I've very obviously prioritized silver over gold, and I still do. It's just my precious metal of choice for a variety of different reasons. We'll get into that a little bit later, but I've always been stacking a little bit of gold on the side, slowly but surely, but at this time, I'm saving up for some gold, but I'm in no rush to get my next piece. I don't know when it's going to be. It could be in a couple of weeks, couple of months. It might not even be this year. And I'll explain exactly why that is later in the video. But before we can even get into the money, I think we need to first talk about the currency. More specifically, what Jerome Powell, head of the Federal Reserve, just said yesterday while testifying before Congress. And he'll be speaking even more today. All right, so if you haven't been keeping up with financial news or my channel where I cover financial news, you may have missed that Jerome Powell had been set to make his first public statement since January, yesterday on March 2nd, to the U.S. House Financial Services Committee, and today, on March 3rd, he will be speaking with the Senate Banking Committee to deliver his semi-annual monetary policy. Well, yesterday, we got some updates, and we'll be getting even more updates today. But let's focus on what went on yesterday, because as I'm filming this video, today's info hasn't even come out yet. So yesterday, we learned that according to Jerome Powell, who's still optimistic about inflation, by the way, he believes that we'll be coming down for a soft landing. And at the moment, he plans to stick to the game plan of a 25 basis point hike at the March policy meeting in just 2 weeks. Now, side note, with the January inflation report that came out in February, I personally thought it was going to be bad enough to make the Fed begin raising rates more aggressively. Maybe not sooner than expected, but in larger increments, like 0.5% at a time. But evidently, that doesn't look like what's happening. Keep in mind, we have one more inflation report, February's report, that comes out next week, 1 week before the March policy meeting, which could, in theory, require the Fed to change their strategy, but more on that later. Yesterday, Jerome Powell also mentioned that the Federal Reserve is prepared to raise rates more aggressively if necessary, depending on if inflation remains high or, God forbid, gets even worse. He talked about how he's expecting a series of rate hikes following the one that we'll be seeing this month, but he didn't specify how many there would be, likely because at this time, he doesn't even know. It's honestly too early for him to make conclusive statements on that. And to be honest with you, it's more so dependent on inflation than him. He did make a reference to the Federal Reserve's handling of 2004, though, which was 18 years back, where there was a 17 rate hike process, which is hard to envision. And I don't know if it'll be that drastic this time around, but if so, buckle up and get ready for some blood on the streets, or should I say blood in the markets. Again, Powell will be speaking again today, but I'm filming this video before that even takes place. So that's all the new info that we have so far, but there's one more event happening pretty soon that could, in theory, change the game plan. The next inflation report, February's inflation report, which is coming out next week. This report will be all the data collected for the month of February, and we should be getting our hands on that on March 10th. Now, I had mentioned toward the end of January that if the next two inflation reports keep getting worse, the Federal Reserve might have no choice but to end the taper sooner than expected and begin raising rates sooner and or in larger increments than expected, which would be a rug pull. And if there's one thing we know about the Federal Reserve, they prioritize predictability and transparency because they don't want to pull the rug out from under us. They want to remain predictable. They want to remain transparent because they don't want to shock the market. That would not be good. That would be detrimental. So of those two reports that I talked about, the next two reports, we already got one of them. And the game plan so far is remaining the same. The other gets released next week, and it'll probably be cutting it too close to the March policy meeting, which is only 1 week later, for any last minute drastic changes to happen. Although, if this upcoming report is really bad, it could, in theory, force the Federal Reserve to take emergency action in an attempt to control inflation. But anyway, though, those are my thoughts on that. Now, finally, before we get into the silver and the gold, let's take a quick look at how the stock market is reacting to all of the craziness today. We currently have the S&P 500 up 0.09%, but it's heading in a downward direction. We have the Dow Jones up 0.29%, but it's heading in a downward direction. And we have the NASDAQ down 0.57% and still heading in a downward direction. Now, funny enough, this morning, we opened up pretty green across the board. We were actually way up. A majority of stocks were way up. And it looks like now we're seeing almost like a late morning nosedive. Keep in mind, I'm filming this video at like 10:30 in the morning. God only knows what the stock market is going to be doing by the time this video comes out, which at that point, the market will already be closed because I post these videos at 6 p.m. But if you're in the Precious Metals VIP Club, you can watch these videos as soon as I'm done editing them, usually around 12 or 1, link in the description. But either way, as I'm filming the video, late in the morning, 10:30 in the morning, opened up in the green, we're heading in a downward direction, looking like a little bit of a nosedive. So it's going to be pretty interesting to see how the stock market reacts to whatever Jerome Powell is going to be commenting on today, if we end up getting any new information that isn't too repetitive to what we learned yesterday. If any new information comes out, we're probably going to see the stock market react to that. The markets are incredibly quick to react. We could see a massive red day tomorrow. We could see a massive green day tomorrow. It really depends on Jerome Powell. He has almost like complete control of what direction everybody moves in. But now, finally, before we get into the silver and gold, since we're on the topic of the stock market, just wanted to give a friendly reminder to go and get your 5 free stocks by downloading Webull and funding your account. They're going to give you 5 free stocks just for doing so. And if you refer just one friend by March 15th, they will give you 10 free random stocks for the referral. And if you refer 3 friends before the end of the month, they're going to give you a spin on the Weeble wheel where you're guaranteed at least 1 free share of Apple with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. If you don't want the stocks, go and get them anyway and then sell them. Congratulations. Now you have more cash to get some silver and gold if that's what you want to do. Weeble link in the description. But now moving away from all that, moving away from stocks and the Federal Reserve and whatever our friend Jerome Powell, Mr. Inflation is transitory, is saying, let's move away from all of that and let's now finally get into the silver and the gold. Sitting here on display, we have, oh, I forgot I had the silver fern out today, the New Zealand silver fern. I actually broke out this bad boy for last night's VIP Club live stream because we were joined by my good friend, Ali Vera, and she's a self-proclaimed plant girl. She likes plants and gardening and flowers and whatnot, so had to break out the silver fern for her. But in addition to that, we have the usual creatures of the north, we have the usual Queen's Beast, we have the usual little stack of miscellaneous coins over here, Type 1, Type 2 Silver Eagle, Canadian Maple, Australian Kangaroo. We have some 1-ounce silver bars, Westminster bar and an American flag bar. We have a 5-ounce sunshine bar, a 10-ounce sunshine bar, a 10-ounce silver bull bar, some junk over there, some 90% constitutional silver, some Walking Liberty half dollars, some Standing Liberty quarters, and then of course in the bottom corner over here, got a little bit of gold. Nice little stack of gold backs just because I consider them to be fun. They're not anything worth stacking necessarily, but I consider them to just be something fun to do. It's like an art collection, art made out of money, topped with a couple of gold coins. Definitely something to stack. Some fractional Eagles, Britannias, and Philharmonics. I forgot what was there, with a nice little stack of coins over here as well, which we'll get into momentarily. And of course, last but not least, the 5-ounce Aztec calendar, which just didn't fit on screen. So anyway, when it comes to silver and gold, what I wanted to talk about today isn't so much why I'm prioritizing silver between the two metals. I'm pretty sure I've made that abundantly clear over the last 4+ years, but right now, one little thing has changed. Because for the last 4 years, I have been stacking silver consistently, and for the most part, aggressively. And one thing that I had been doing since the very beginning is stacking a little bit of gold on the side, and the main reason for that was for diversification. And I was stacking gold way slower than I was stacking silver, and this was by design. I wanted far more silver than gold. Silver was my priority metal. It's what I consider to be the opportunity metal, and I still consider it to be the opportunity metal. Gold, on the other hand, I'm not going to say it's not an opportunity. I absolutely believe it is, in my opinion at least. But I consider it to be the powerhouse metal. And funny enough, when it comes to gold, sometimes I like to go on different precious metal dealing websites and scroll around and see, just see what's out there. Just get some ideas and just look at the different sales that are going on. Now, I don't really get any silver or gold online anymore. It's very rare for me to do that because hashtag support your LCS, your local coin shop. But if somebody wants to know what LCS stands for and you don't want them all up in your business, let them know that it stands for locally canned soup, and then just walk away. Let them figure it out. Those new support your local coin shop t-shirts and hoodies will be linked in the description. They're in the DYDSS store. But as I was just saying, sometimes I like to scroll around and see what's on different websites. And here you can see, I don't know if it's going to really be in focus, but my 2021 gold Kookaburra coin, 10th ounce, limited mintage, and also beautiful looking. So maybe about a month ago, I was scrolling around on a couple different websites and I stumbled upon the 2022. I did not order it, but I will be honest. There was a small part of me that was very tempted to do so because it was a beautiful looking coin, but I chose not to because I want to stick to my game plan. When it comes to stacking silver and also when it comes to stacking gold, I don't think that 2022 10th ounce gold Kookaburra fits into my gold stacking strategy. But either way, between the two metals, I'm prioritizing silver over gold. But even when it's time for me to get back into stacking gold a little bit more consistently, I don't think I'm going to be going with 10th ounce gold coins, regardless of how nice they look or what's going on. Now, of course, if I can get one very close to spot, which is probably not going to happen, but hypothetically, if it were to happen, sure, absolutely, I wouldn't pass up on an opportunity. Who says no to near spot gold? But for me, I think it makes a little bit more sense to go with larger denominations right now. The quarter ounce gold coins. I definitely want some more of those. And I'm not even opposed to, as I'm saving up, maybe I'll save up for a half ounce gold coin or something like that. Time will tell. And rather than converting my dollars into gold, for the most part, even though I will from time to time trade some dollars for gold, I would much rather get my gold through silver. See, I've explained this process in the past, and I haven't gone all the way yet, but you go to work every day, you're trading your time for dollars. You get home, and at the end of the month, you trade those dollars for all the bills that you have to pay, but the dollars that are left over, trade for a little bit of silver, or as much silver as you want. And then later on down the road, if and when the gold to silver ratio gap closes in, trade a little bit of silver for a little bit of gold. See, that's my plan. That's my strategy. That's what I would like to do. I'm not going to sit around waiting for the gold to silver ratio gap to close in, hence why I use my dollars to pick up a little bit of gold from time to time. But this year, I kind of made a decision that, sure, I'll set a little bit of cash aside on the sidelines, and I'll save up for my next piece of gold, but I'm going to be honest with you. I'm in no rush to get there. I'm in no rush to get my next gold coin. Or my next gold anything. I'll probably be pre-ordering some of the new gold backs that are being released, but that barely counts. I'm talking about like a larger piece of gold, whether it be a 10th ounce, a quarter ounce, or a half ounce gold coin. I don't care if it's a gold eagle, a maple, a Britannia, a Philharmonic, a Krugerrand, doesn't matter to me. Gold is gold, and I'll stack it as long as it's something that's obviously recognizable and popular and in demand, and preferably at a low premium. But right now, I'm in no rush to get there. I don't care if it takes me a couple more weeks. I don't care if it takes me a couple more months. I don't even care if I have to wait until next year. Right now, between the two metals, I'm prioritizing silver over gold more than I ever have in the past. And the spot price of both precious metals are kind of up right now. And I don't want to rely exclusively on the gold to silver ratio, but it also depends on why the gold to silver ratio is moving apart or closing in. See, it's very easy to say that when the ratio goes to, let's just say, 1 to 40 instead of somewhere in the 1 to 70s, it's very easy to say that you would trade silver for gold at that point. But before you say that, you got to ask yourself, why did the ratio gap close in? Did it close in because silver went up drastically? That can close the ratio. But what about the rare occasion where gold falls down, percentage-wise, more than silver fell down? Because that could close the ratio as well. And in a situation like that, it might not make sense to trade much silver for gold. You can at that point. I wouldn't say it's a bad idea. The ratio is the ratio, regardless of what spot price is. But at that point, it could make more sense to trade your dollars for gold rather than trade your silver for gold. If silver is still dirt cheap, you might not want to get rid of it in exchange for what I consider to be the powerhouse metal. If there's a sale on gold, and just according to logic, it just makes more sense to trade your dollars for gold rather than your silver for gold. That way you have both metals. In a situation like that, that just might make more sense. But right now, the spot price of both precious metals are up. Not by a whole lot. Gold is not in the $2,000 an ounce range. Silver is not in the high 20s. But if you look back a couple of months ago, you might remember Gold being in the $1,700, $1,800 range. Now it's in the $1,900 range. Not a massive jump, but it's up from where it was. Silver, on the other hand, wasn't that long ago. Silver was like $22 an ounce. As of lately, it seemed like $24 an ounce was the support level or the secure line, whatever you want to call it. Right now, as I'm filming the video, it's in the $25 an ounce range. So both precious metals, according to spot price, are up from where they were a couple months back. And with everything that we have going on right now, I think it makes far more sense for me. Maybe not for you. For you, it might be the opposite. But for me, it makes more sense to be focusing pretty much all of my attention on silver right now when it comes to financial defense. Obviously, I'm playing financial offense more than defense right now because we're seeing far more red days than green days as of lately in the other markets, which tells me that more people are selling than buying, which also tells me people right now are afraid. They're fearful to be playing offense. And according to the most overused and overrated investing quote that there is, be fearful when others are greedy and be greedy when others are fearful. Others are fearful right now. So I just take that as a little bit of a hint that maybe it's my turn. Maybe it's my time to be greedy while they are fearful. And vice versa when things flip. When it gets to the point where people are rallying back in, usually that means spot price comes down a little bit. And that's the time for me, maybe not for you, but for me, that's the time for me to prioritize playing financial defense over offense. Obviously, I play both all the time, no matter what's going on. But depending on what's taking place, it makes me shift up my strategy a little bit. Depending on what's going on regarding jobs reports and inflation reports and what the Federal Reserve is saying and doing and what's going on. Is there a war going on? Is this going on? Is that going on? All of these things play a role in my personal decision makings when it comes to if it's my time to score or if it's my time to retract and play defense. Go into wealth building mode or wealth preservation mode. Again, I play both because I don't think you can have a strong defense without a strong offense, and I don't think you can have a strong offense without a strong defense. You gotta have both. But to me, it doesn't make sense to go 50-50 100% of the time. Usually, it makes more sense to go 75-25 100% of the time. And whichever one I'm prioritizing over the other, that flip-flops depending on news and world events and what everybody else is doing. Because what everybody else is doing, I usually do the opposite. As a contrarian, that's just what makes the most sense to me. I haven't been doing this a very long time, but I have been doing it for a little over 4 years, which I guess for some people out there that might sound like a long time. It's not in the grand scheme of things, but it's a long enough time to start to get an understanding. And I'll be honest, over the last a little over 4 years, as a contrarian, pretty much every single move I have made, being the opposite of what everybody else was doing, has ended up incredibly, incredibly rewarding. So that taught me that this is the way to go. I pay attention to what everybody's doing. I pay attention to all the different markets, including the markets that I'm not affiliated with. Obviously, I pay attention to the silver and the gold. I pay attention to the stocks. I pay attention to the real estate market. I even pay attention to the digital currency market. And the reason I do this is because I want to see what everybody else is doing. And when I figure out what everybody else is doing, that's usually an indicator that that's not what I should be doing in any way, shape, or form. Whenever something gets super popular, whenever something gets super in demand, when we see something start to rally, I take that as a hint to stay as far away from that as possible and start asking myself, okay, that's going up. What is the exact opposite that's going down right now? Because that's where my eyes should be. And a lot of the time, when we see the stock market rallying like it did all 2021, what did silver do in 2021? Silver was on a decline for pretty much the whole year. We saw at the very beginning of 2021, I think it was February 1st of 2021, if I'm not mistaken. I just checked the other day. I can't remember. It was around February 1st of 2021. That's when spot price of silver hit $30 for a split second, because it was in the $29 range and it was holding on to $28, $29. Over the course of 2021, silver had gone from hitting $30 for a split second to declining all the way down to the mid to low 20s. And a lot of the time, the spot price of silver and the spot price of gold is almost like the exact opposite of what the stock market is doing. Not always, but a lot of the time. So silver was on a decline last year. Meanwhile, the stock market did pretty much nothing but go up for 365 straight days. The whole entire year, how many red days did we have last year? Barely any at all. And if we did, it was just for a split second because they claimed a new variant was out and everybody panicked and said, oh no, oh well, and then it went right back to green. The whole year. Right now, the opposite is happening. This entire year so far, granted it's only been 2 months and a couple of days, but guess what? We've seen far more red days than green days in the stock market. The stock market has been on an almost constant decline this whole year so far. Meanwhile, what has silver been doing? Silver's up a couple of dollars from where it was just a couple of months ago. So these are just the things that I pay attention to. I pay very close attention to what the different markets are doing, because oftentimes when one market starts to move in an upward direction, you can kind of catch when the other markets follow along with it. And silver and gold, a lot of the time, end up doing the opposite. Do the opposite of what everything else is doing. Not always, once again, but that's why I pay attention to absolutely everything. When I see something going up, I can usually tell, okay, within the next couple of days, we're probably going to start to see silver and gold go down. Or vice versa. When everything else starts to head in a downward direction, I could say, okay, probably tomorrow or within the next 2 or 3 days, silver and gold are going to be moving up. It's not that difficult. And that's why I pay attention to everything. Whatever's moving up, I buy the opposite. That's my game plan. That's my strategy. And when it comes to gold, gold is up right now. So I'm a little bit standoffish. I'll save up for my next gold coin. I'm in no rush to get it. I'll get it when I get it. Doesn't matter to me. My eyes are on silver and silver only when it comes to precious metals for the time being, with the exception of the next couple of gold backs. But other than that, that's what I'm going to stick to. That's what works for me. That's what's worked incredibly well for me for the last over 4 years. And if it works, I'm going to continue doing it. But that's just what works for me. It might not work for you that way, so you have to make your own decision on that and do your own research and figure out what the best move is for you. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Do you think that Jerome Powell's comments yesterday created more market uncertainty? And by the time you're watching this video, if the new information from Jerome Powell commenting today has come out, let me know how you think that's going to affect the markets likely tomorrow. Head on down to the comments and let me know anything and everything related to today's video topic when it comes to the Federal Reserve, or of course when it comes to the silver and the gold. If you guys like today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel, which is my backup channel for weekly videos. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We have t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. We have the limited edition, luck has nothing to do with it, t-shirt and hoodie, only available until St. Patrick's Day. Get one while you can, and a portion of the proceeds are going to St. Baldrick's Foundation. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts on silver and gold every single day. You can watch all of my videos early and commercial free. Every Saturday morning I post a brand new adventure vlog, and there are a ton of other perks as well. I guarantee you the value exceeds the cost. VIP Club link in the description. And of course, last but certainly not least, go and get your 5 free stocks by downloading Webull and funding your account. They'll give you 5 free random stocks just for doing so. And then if you refer 1 friend by March 15th, they will give you 10 free stocks for the referral. And if you refer 3 friends By the end of the month, they'll give you a spin on the Weeble wheel, which guarantees you at least 1 free share of Apple, with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. Again, if you don't want the stocks, go and get them anyway. Sell them. Congratulations. Now you have some more currency to go get you some money if that's what you want. Weeble link in the description. And of course, I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the Federal Reserve, and I guess more specifically, the chair of the Federal Reserve, Jerome Powell, testifying before Congress yesterday and today. So far, again, as I'm filming the video, I only know what went down yesterday. I will soon find out what happened today. But let me know in the comments if you think that his comments or his game plan or strategy created even more market uncertainty. And then, of course, when it comes to the silver and the gold, between the two metals, which is your priority? And more importantly, why? Why are you prioritizing silver over gold? Or why are you prioritizing gold over silver? Do you see eye to eye with me? Do you have a different opinion, a different perspective, a different game plan, a different strategy? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.